Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions to the best of my ability and reply to your comments if it's not a question. But I do have a question for you. So I have sold the current place I'm living in, my house, and with the funds of that, I have bought some land and we'll be building a house. Now, that will cost a little bit more than the funds I'll be getting from selling my house. And that's about $100,000 more. I have a lot of investments and I can fund that by my investments. But I'm thinking, should I? So I can get a loan paying, I think it's 6%. So the interest rate's about 6% on a mortgage right now. You can actually get below 6% with the recent interest rate cuts. And I'm thinking, say I wanted to borrow $100,000. Would I be able to get a return? Because the interest on that $100,000 per year will be $6,000. Can I get a better return than $6,000? And my answer to that would be yes. So I'll probably be better off actually taking a loan and maintaining my investments. However, on the flip side, with the markets overvalued, with all the chaos in the United States right now, with the chance of maybe increasing inflation and a possibility of the stock market dropping, that possibly it's not a good idea. But then on the flip side of that, Trump is obsessed with the stock market. He actually rates his popularity or what sort of job he's doing by what's happening with the equity markets. That is definitely true. That's also true for a lot of his supporters. So the last thing he wants to see happen is in the stock market to take a nosedive. If he sees the stock market taking a nosedive, he might, I wouldn't say panic, but when I say panic, it's probably a good thing for the stock market and for investors. So a lot of interesting things going on right now and decisions I have to make. I won't have to make those decisions, however, for probably 5 or 6 months. But I am leaning towards getting into a little bit of debt to maintain my investments. Now, I could be more efficient with how I invest because there's quite a few holdings that I could easily sell because they're not doing much right now. So in a way, be a little bit less patient, be a little bit more impatient. So it's all part of the journey we take as investors, growing and learning and adjusting and being adaptable to the situation we find ourselves in. I definitely don't want to sell all of my holdings and because I love investing. Anyway, so let's go to have a look, and I'd love to hear your thoughts. I'd love to hear your thoughts. What do you think I should do? I am definitely leaning towards getting a loan, and there's a chance, just a chance, that I might ask my parents to give me $100,000, maybe $200,000, and I'll pay them back at a rate greater than a term deposit. There's a reason behind that. They do have a term deposit where they have all their money. I'm not advising them at all. I don't want to advise them what to do with their money. It's their choice, but they have their money in a term deposit, and I actually could give them a better return than the term deposit, and the loan I take from them would be lower than a mortgage. So it's a win-win for everyone. Anyway, I'm thinking of doing that, but you should probably, I don't know. You should, in my opinion, you should never invest your family's and friends' money, but borrowing from your family and friends, I'm not sure if that's a bad thing or good thing. Anyway, so I'd love to hear your thoughts. So give me your thoughts. And in fact, I wasn't going to do a video today. I just wanted a day off. I think it's been a while since my last day off, maybe a month or so. Yeah, I wasn't going to do a video, but here we are doing a video. Okay, so let's go back and have a look at the most recent question from Never Gunter. Spam. Absolutely spam. The reason I know this is spam, typically you get way more thumbs up. The reason I know this is spam is simply because there's a bit of name dropping in the reply section. Gabriel Alberto William is my financial advisor. I'm just putting it out there because you asked. Anyway, so this is sort of spam. Typically, you see way more thumbs up and way more responses, but I am just going to say that. Anyway, hopefully it is spam, because if it's not spam, I've made an absolute fool of myself. Anyway, so the first real question, maybe not. Philip and 5162, pullback in share price, talking about Audinate, second chance to buy now, that pretty much all sellers out. Okay, let's have a look at the chart for Audinate. This is the company I own. So the question I would have to myself, look at CivMec. Ugh, what an ugly chart that one is. And the funny thing is about CivMec is they warned this would happen. Well, actually, they didn't. They said business was a little bit weaker, or looking a little bit weaker into the second half of the year. I don't think the market expected the first half to be fairly weak as well. Anyway, let's have a look at Audinate. Definitely a little bit pullback in share price. Share price did bounce during Friday's session. Now, the problem is the weakness on Wall Street, Wall Street's Friday session. NASDAQ down, was it 2%? Let's have a look. NASDAQ down 2.06%. Dow Jones down 1.69%. And I think the small caps, Russell 2000 down 2.94%. So I do expect a fair bit of weakness on the Australian market on Monday, and that should affect Audinate. So I would not be surprised to see a share price of Audinate approach $8. Now, even though the share price has rallied on the back of their results, technically this is, now if I really wanted to be absolute rigid with my definitions, this is not yet a breakout. I do want to see a crossover in the moving averages, but the share price did get to at least a 3-month high. A 3-month high? Yeah, at least a 3-month high. Pretty big volume on the back of positive financial news. And this pullback could be an entry point. I'm just concerned about what happened on Friday and expect a fairly weak day on Monday's session. So that's my main concern. But this is sort of pullback I'm always waiting to see. But the one thing I would like to see here is just a crossover in the moving averages. So that's Audinate. I do have a position in this company for the longer term, and I'm not sure if I'll trade it just yet. I'll leave that up to you. JW3786, hi Neppies with a Z. There you go. In a very early video from your series, you mentioned a viewer had sent you a letter regarding Telix. The letter was less than flattering regarding Telix products or services. However, you only mentioned briefly. Can you please send him or her a return letter using the words from Les Grossman, take a big step back and your own face. Telix is just getting started in Asia. Yeah, so what can you say? People can have their opinions. That's what I'm going to say. People can have their opinions. We're all different. We're going to have different opinions, that sort of thing. So whoever sent me this letter, I don't think I have it anymore, but whoever sent me this letter, they're allowed to have their opinion. And the most important thing is when you have an opinion and then you're wrong about that opinion, which obviously this person is, they should own up to it. And it's very important to be open-minded, to be willing to change your opinion if the facts show that you are wrong. Unfortunately, many people don't do that. They can't do it. They won't do it. I don't know which one it is, can't or won't. But I think that's the way we grow as people, is being willing to be open-minded and change our opinion on things. Because more than likely, we're going to be wrong about a lot of our opinions on things. I can almost guarantee you, I am wrong about my opinions on many companies. And that is bias. That is a simple thing. And I think it can be deflating to find out you're wrong about something. It can be, I think some people, it's shattering, earth-shattering to be wrong about something. And that's why I think a lot of people believe in stuff that is obviously wrong, because they just can't change their opinion. They can't look at different opinions, different thoughts, and actually look at the facts. Look at the facts and then change your opinion. So I'm not going to mention or even think about this Telix letter many years ago. And yeah, so Telix is just getting started. I have no problems with Telix or owning Telix. If I sold the majority of my investments, Telix would be one of the last ones I sell. So thank you for that. Okay, ATX August, still time to load the wagon. New FDA head looks likely to be experienced pancreatic surgeon. Oh yeah. Lewis Don, what's happening to Orthocell? I don't know what's happening to Orthocell. You're talking about the chart? This could be just, don't forget, Orthocell share price has run up significantly. Look at this run up in share price over the past 6 months. It's been significant. Share price has gone from below 40 cents to $1.41. So even with the share price pulling back, there's still going to be a lot of people, a lot of investors who are in profit. So when they do see the share price pull back, you'd say they're panicking. Fairly big volume coming through the last 2 days. So this is one to keep an eye on, particularly if you're trading it, because of that volume and because the share price has pulled back. But this is one I'm trading. So there is a chance I would take profits in this if I don't see any strength coming back in the share price. And again, I'm expecting a weekday on Monday, and probably there's a chance that Orthocell might have another down day. It's just that volume I don't like, particularly on a Thursday session. And it's just sentiment. What is driving the share price of this company at the moment is just sentiment, short-term sentiment. And what happens when the share price pulls back like this, what you're going to see is some people who had or couldn't buy in or didn't want to buy in during the up run, they see the share price pull back and go, oh, something like I might do on occasion. I see the share price pull back and I think, oh, now's the time to buy. So we need to see buyers coming in. We need to see enthusiastic buyers, sort of like we're not seeing with Pentanet. With Pentanet, I was hoping we would see some enthusiastic buying for this company as the share price pulls back. We haven't seen anything. And the problem when you don't see enthusiastic buyers coming in is the share price just drifts lower. You just see a little bit of selling, no volume coming in. So Pentanet released a really good Appendix 4C, and I thought this would be the trend, this would be the inflection point, not only for the company, but also the chart. But we just see the share price drifting because no one's wanting to buy, even with this pullback. So I'm a little bit concerned about Pentanet, a little bit more concerned about Pentanet than I am Orthocell. Would I sell Pentanet? No, because the share price or the markup of the company is so low that if they released another really good Appendix 4C in the current quarter or for the current quarter, share price would absolutely take off. With Orthocell, there's a little bit more excitement built into the share price. Markup is 352 million, so this could go anyway. And yeah, sentiment will drive the share price of these companies. Still a story stock in most regards. Sentiment will drive the share price in the short term. And if we don't see that buying, this could be a concern. Now, when would I buy? I should put a line. I do this for most of my holdings. So I go through most of my holdings over the next few days and just see which companies I'm more willing to sell, particularly if the share price drops a little bit more. Or the sell, I would be at $1.25. If I see it drop below that, that would be a negative move for Orthocell. Okay, let's move on to the next one. All right, so here's another one. So yeah, this is one. Oh, Gene Hackman has replied. This is another. This is the spam you always see, like 27 thumbs up. And then there's probably some name dropping here. Let's have a look at the name drop. Here we go. Lane Hodge, my CFA, Ashley Lane Hodge. So spam. And I get a lot of these. And I usually don't tell you about it. But anyway. Okay, Just James Dean has seen the Telix results. 860% increase in their profit. The share price is way too underpriced. Goddamn 200 PE too low. I can't argue against that. I'll be honest with you. I can't argue against that. This is the sort of company that you'll see value investors run from because they see the PE ratio. They just don't understand that it's all relative. PE ratio is all relative. You get a PE ratio of 28 for CBA with no growth or very little growth, and that could be more expensive than Telix, which has a PE ratio of like 200. It's all about the growth. And when you do have a quickly growing company like Telix, there's more room for a little bit of, I wouldn't say error, but because it's growing so quickly, you could be a little bit out when you come to your valuation, if you want to do a valuation for Telix. And if you did a valuation of Telix, your range of possible values would be extreme because your growth could be out by a significant amount. The only sort of companies I would do a DCF for are those companies that aren't growing or growing very slowly, maybe banks, something like that. You never do a DCF for this type of company. You might do a reverse DCF just to see what sort of growth the company or the market is pricing in, but there's no point doing a DCF for Telix. Simon PT 2000 says, Pro Medicus, Telix, CSL, ResMed, doing Australia proud. I own all four of those companies, yes. And I think there is a chance that we're going to see other healthcare companies join this list over the next 5 to 10 years, and potential, and I just wish this would be true, that we become more of a pharmaceutical healthcare market instead of a mining market, because mining is just No, not high quality. These companies are high quality, every single one of them, and they could go significant greater rates than mining companies. And that's exactly what we're seeing with Telix. And a lot of mining companies, what you see is that initial massive growth because they go from exploring to production and then not much growth after that. Anyway, so I'm not a big fan of mining companies, more just trading mining companies, definitely not only for long term, but these sort of companies, yes, definite potential growth, massive growth potential. And you do have to pay, particularly Pro Medicus and Telix. CSL, I would like to see a little bit more growth there, and ResMed doing well as well. Oh yeah, bought Telix at 666. Yeah. Funny enough, I've not gone through the completely gone through the Telix results yet. I've been too busy, which is unfortunate. I won't be saying that for the next year because I'll be on leave, and I am thinking of doing another YouTube channel. Not on investing, by the way, on something else. Yeah, so thank you for that comment. Happy now. Yeah, 666. Look, I'm not a religious person, so the number 666 doesn't mean anything for me, but it's just an interesting number. Telix as big as CSL in 20 years. Yes, please. Go back 20 years and CSL was 650. Now 250. Oh, how I can dream. Love your work, Kneppy. Could Telix be as big as CSL? It's a possibility. Probably a better chance that Telix will be as big as CSL now, not CSL in 20 years, because CSL could keep on growing at a pretty good rate and it will still be bigger than Telix. But Telix as big as right in 20 years, as big as what CSL is right now. It's a possibility with everything they have in the pipeline, just a possibility. But yes, it is a possibility. That's all I'm going to say. It is a possibility. How much bigger can you get? There aren't enough money in Australia. Well, we have the world. These are global companies, and they're not only these global companies, but people from all investors and fund managers from all over the world are investing in these companies. In fact, if you have a look at the Telix registry, which I used to use Guru Focus for this. No, I used to use ownership. I used to use Ticker for this. Here we go. Here is the ownership. Oh, this is just insiders, holders. Look, State Street Global Advisors. They have a 5% stake in this company. Vanguard Group, JP Morgan, Government Pension Fund Global, the Norwegian Bank. But State Street Global Advisors, if you just Google them, I would say they are United States. Investment vision of the State Street Corporation. I don't know much about this, but Boston, Massachusetts. There you go. Anyway, so they are the largest holders. Well, not the largest holders, because the largest holder, by the way, is the CEO and the founder, or one of the founders. I'm pretty sure. The two top holders, Christian Berenbush, I don't know, Andreas Kluge. I'm pretty sure, though, both co-founders, and the value of their holdings, they're not quite billionaires, but they're getting up there. Anyway, let's go back. Ayaz Rahman, would you say this is the next Pro Medicus? Okay, this is where it gets interesting. If you have a look, let's go have a look at Pro. I wish I could compare companies. If you have a look at Pro Medicus growth, so Pro Medicus is growing their revenue at roughly 30% per year. And they've been doing it for 10 years. Actually, 10 years, it's 27%. Earnings per share at 42% per year. You just have a look at their revenue growth and their profit. So revenue has been increasing, but revenue is only up to 84.6. Now, the thing about Pro Medicus is their margins. Massively higher margins. So they don't need much revenue to be, any sort of revenue growth is mostly going down to the bottom line. So $184 million of revenue, compare that to a Telix, which has now or will have more than $1 billion of revenue. The difference is what Telix is doing in terms of growing the company. So they are spending a lot of money to grow the company in the future. I'm not saying Pro Medicus isn't, but they're very efficient at what they're doing, and they do have potential for pretty good growth in the future, just what they're doing. Now, they could spend a lot of the money they are creating in their business by maybe acquisitions, research and development, but they're not doing as much as what Telix is doing. And at this point in time, Pro Medicus has, what's Pro Medicus markup? Pro Medicus markup is $30 billion, and Telix is well behind that. I would say that they're totally different companies. You can just see by the revenue, totally different companies. And I would say if I don't want to compare, I don't want to say Telix is the next Pro Medicus because they're on completely different paths. So they're completely different paths. And I'd say Telix is the new Telix. And we haven't seen it before on the ASX. I don't think we've seen this sort of company on the ASX before. That's this sort of growth in revenue from almost zero to over $1 billion in 4 years. We haven't seen. Maybe a mining company, maybe Fortescue. Actually, let's have a look at Fortescue. This is interesting. The only company, the sort of company that might have this sort of revenue growth is a mining company, and we might not be able to go. I know we can't. I only have 10 years of history here. So there would be mining companies who go from doing nothing, just exploring, to production, and you see a massive drop in revenue. We don't see that sort of revenue growth we're seeing, year-on-year revenue growth that we're seeing with Telix right now. And I'd love if someone could give me a company that has seen this sort of revenue growth in the past 30 to 50 years. I'd love to see that. I'd say not even CSL did that. Going from almost nothing to 1 billion or over 1 billion in 4 years. It's really impressive. Okay, Scott, II9RB, and Motivational Flavio talking about Superloop here. I'm surprised at the muted response from Superloop. I bought more. And Kneppy, Superloop released great earnings, might be worth checking out. Now, I'll be completely honest. I did see Superloop release their results, but they released their results at 9 a.m. And this was on the Friday. I was really busy, so I had a very quick look at their results. As a shareholder and trading Superloop, I was happy with the results, happy what I saw. And because the share price was only up 2.8%, it did not make it into my list of companies to talk about. So very happy with the results. But this is one of the companies I want to have a closer look at in the next few days because, again, I'm trading it. But I have no reasons to say anything negative about their results. Probably the only person who might say something negative is anyone who's looking for a company that is profitable. So Superloop is not yet profitable, if I remember correctly. But they're EBITDA positive, nice growth in revenue. So revenue growing 30.6%, and EBITDA 25 million, underlying EBITDA 38.2 million, net loss after tax. Yeah, so net loss after tax, but strong cash generation with free cash flow of 16 million. So everything's moving in the right direction for Superloop. But with the share price only rising 2%, it just didn't make it into my my list of companies to talk about. But yeah, I think it was a good result. And obviously, there was 4 people who gave that thumbs up, Motivational Flavio. So yeah. AU5657, REA got sold off because DHG getting acquired by CoStar, which might hurt REA competitors. At least that's the narrative. Is that really? I could sort of see that, but a Motivational Flavio said, yes, but I believe it's no reaction. CoStar management is great, but won't be able to turn Domain into the market leader overnight. REA is still the best breed in. I find it very hard that anyone could erode REA Group's moat, or realestate.com, whatever it's called. I have a very hard time. They can erode their moat. It's all about, what do you call it? I forget what they call it. It's all about stuff. And there's 2 words I can't think of right now. it's not flywheel. There's effects, not community effects, something effects. I just have a hard time. I don't think I'd find it'd be extraordinary if Domain could get to that level, and I think it's unlikely. And the other thing I should mention is I think Motivational Flavio is right. It's an overreaction, and the market tends to really overreact in these sort of situations. If this is why they're selling off, they tend to react first and then ask questions later and go, geez, we made a mistake here. We asked the wrong questions. We overreacted, and yeah, the market doesn't like risk, and so they see the little bit of an added risk here, and the added risk is so small that it's not point even talking about. So if that's the reason why REO got sold off, that's even weaker, even weaker than one of the insiders selling some shares. That's my opinion. Anyway. Mace 552, start of a downtrend for Bioxyne. This is another one where we have seen the share price pull back, and I wouldn't say it's a start of a downtrend just yet, but we need to see some buying coming in. So we haven't seen, you can see a really good volume when the share price was going up, but we haven't seen any good volume as the share price dips back. We need to see some buying come back in. I'm a little bit concerned the share price has dropped below 4 cents. And with a possible big down day on a Monday, this could be a little bit more of a concerning chart. So I am close to maybe taking profits with this one, Bioxyne, and I am up threefold. So I'm always willing to take a bit of profits at this point for these type of plays, because if we see more weakness, there's a chance the share price could just keep on dropping, and that could be a mistake. With Bioxyne, I probably wouldn't completely sell out. I'll probably maintain a bit of a holding. And then if I see the share price starting to show a bit of a base and no more selling coming in, then I might add at that point. But yeah, so a few of these smaller companies showing a bit of weakness in their charts, which is actually not a good sign for the overall stock market, because you usually see the first sign of weakness in these sort of companies. The ones who are thinking there's more risk in these companies, selling out and flight to safety, that sort of thing. So getting out of the riskier plays into safety. Oh, and that's back to where I started. Okay, I completely forgot to time this video, so I have no idea how long am I into recording. I'm going to end it there for this video because I actually am on my lunch break. My final day shift for over a year. Anyway, so a fairly quiet day, the shift I'm doing today. For those who don't know, I am what is defined as an aviation forecaster. And I look after, for instance, I am doing New South Wales Easts today. So I do quite a few products, including Sydney Airport. So it's quite windy at Sydney Airport. We have a northeasterly at about 20 knots. So we deal with knots. We don't deal with kilometers per hour, but we deal with knots, or about knots. Anyway, so pretty fine in Sydney. In fact, most of New South Wales East. So we're talking about sort of Dubbo East. So if you think of a line, in fact, I can show you. I can actually show you exactly what I do. Why not? Instead of talking about it, I can show you exactly what I do. I'm pretty sure the Bureau doesn't mind. If you go to Aviation Weather Services, fun enough, weather is very important, extremely important for the aviation industry. Let's have a look. So, in fact, if I go to Aviation Forecast, there's a thing called Graphical Area Forecasts. And I can actually show you exactly what area I do. This is the area. So we're talking about from Coolangatta all the way down to south of Merimbula and out west towards Wagga Wagga, Parks, Dubbo, Narrabri, and Moree. These are different areas or weather areas. So maybe some showers up here in A, more likely offshore, and eventually we're going to see some showers. In fact, not to go this one, there's a chance we might see some storms in the far southwest of this area, so towards the Alps and a little bit west of the Alps. There are storms currently just the southwest of there. There's this trough coming through. So this is what I do. This is actually one of the products I do. A lot of the jargon here you won't understand. And the other thing I do is what's called terminal area forecasts. So we can have a look at Sydney down here. I don't do all these, but I do a lot of them. And there's Sydney. So I can tell you just by looking at this, The forecast. So you're talking about this is from, so FM is from. So this time we always speak in aviation. In a lot of meteorology, we speak in Zulu time or Greenwich Mean Time, which makes sense because aviation needs a standard time, and because planes all over the world, so we need a standard time. And all these are, things that can affect the airline industry. Wind direction and speed, which can be very important for which direction the plane lands in from, because you want to land, when a plane is landing, they want to land into the wind. Yeah, that's right. And then the next one is Viz. So if we think the Viz is going to be below 10 kilometers, we have a line there, but I believe the visibility at Sydney is going to be above 10 kilometers. So you just put 999. And this is cloud bases and the amount of cloud. So few cloud at 4,000 feet. And there won't be much cloud. CAV-OK is, it's above 10,000 above 10 kilometers in visibility. That's visibility. And there's no cloud or very little cloud. You also have a remark section. You can put some stuff there. T is temperature in 3 hours increments. And Q is Q and H, sort of like a pressure. And this is telling me it's a TAF 3. So we update Sydney TAF every 3 hours. Other TAFs, we update those every 6 hours. Some TAFs like Scone, we only issue that once a day. So it's not a 24-hour TAF. Sydney is a 30-hour TAF because it's international. It is the most important TAF in Australia by far. Yes, and then it probably goes Sydney, Melbourne, Brisbane, close to each other, but Sydney is by far the most important TAF. And then we also have this METAR is just the latest observation. For instance, the winds are 050 at 21 knots, so I'm a little bit weaker, and visibility is good. I'm not sure about this few. There wouldn't be much few, I'll tell you that much at that point. That's the observer. We just still have an observer there, but we're getting rid of most of the observers. And that's temperature, dew point, which is what meteorologists use. We don't care about relative humidity. It's irrelevant. And that's the pressure and their remark. And that's rainfall. All right, that's what I do. So I don't do Tamworth. I do Taree, place I lived. So whoever did the Taree TAF this morning put, there might be some light drizzle this morning. And then we have a tempo inter for worst weather. So tempo is between 30 minutes and 60 minutes where the visibility might be down to 3,000 meters and some low cloud as well. So it's broken cloud at about 1,000 feet. So we deal with feet, not meters when we talk about cloud. Yes, so it's really interesting how we use different scales for different things. Yeah, it is interesting. So it's feet, not meters. Anyway, and Williamtown, we also do bases as well. So we do, say, we do Ambley, Oakey in Brisbane. We do Richmond in New South Wales. We also do Holdsworthy and Williamtown, which is sort of a dual airport. Orange, Nowra, Nowra as well. That's also a base. I don't do Norfolk Island. We also do, what's the other one? What's the other island out there? Lord Howe. Lord Howe should be here. Here it is. Anyway, there's some TAFs that sell nil current because some of these TAFs are not issued all the time. Particularly, all TAFs have a category, so Cat A all the way through to Cat D. Cat A's are like Sydney. They're the important international ones. We always do those. Those are usually 30 hours long. Sometimes we do Cat D's and they're not issued all the time. That could be like 12 hours long. Anyway, that is what I do. This is not the only product I do. As I mentioned, I do this product as well. It's called a graphical aerial forecast. So I could work New South Wales East, Queensland South, Queensland North, NT or WA North. WA North is interesting. Completely different weather than Queensland North. Anyway, so that's what I do now. I used to be able to do everything, public weather, severe weather. I used to be able to do tropical cyclone forecasting, severe storm forecasting, public weather forecasting. Now I just do aviation because they just leave me alone, and that's what I want. A lot of autonomy when you're doing this job. Anyway, that's all I have. So hopefully you've learned a little bit of what I do. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.